Let's just look at markets here. Markets are about flat here. We're recording this a little bit after 11 o'clock. Yesterday, Frank and I talked about the AI bubble talk. A lot of great smart investors are warning about the excessive amounts, trillions of dollars over the next several years, hundreds of billions of dollars, billions and billions of dollars just last year and this year in CapEx. And I don't want to beat a dead horse here. Tune into yesterday's podcast about those comments. What I want to explain is forget bubble crazy talk. What if the markets pull back 10, 15, even 20%. I'm not predicting this is going to happen. Andrew Ross Sorkin's out with a book, 1929. What do you think when you hear 1929? You think crash. But I'm not predicting crash. I'm just warning about some things that are out there. Okay, well, thanks for that value. There's always things to be nervous about. There's always reasons to point and say, hey, you know what? This is scarier than hell. You shouldn't be involved in this. You shouldn't invest in this. Trust me, my late grandfather, he fell for all that. That's one reason I'm so passionate about stocks and having exposure to the market. Everybody ought to have exposure to the market, even if that's just a ETF or low-cost ETF or mutual fund, low-cost mutual fund that has you exposure to the S&P 500. My grandparents, I'm very blessed. I still have 3 out of the 4 grandparents. They're in their 80s. 2 of them have exposure to the stock market, as they should. They're still compounding their wealth. One of them doesn't, because she was with my late grandfather who is anti-stock market. He thought his grandson was a crook for getting into this business. So my point is there's always things to point at and be cautious or not invest. Don't fall for that. Don't go. You don't have to get crazy. I'm not telling you use leverage. I'm simply telling you have exposure to the S&P 500 because we are in a risk-on environment. We've talked about money printing, debts and deficits, debasing of the currencies and all that stuff. You want to focus on great businesses. For the long term, you buy the market. That's the easiest way because the S&P shuffles for you. The point is, let's think about if we pull back 10%, 15%, whatever. That means a lot of individual stocks are going to get hammered, just like the April tariff tantrum. And the point here is, I want you to think out loud about what is fundamentally changing as the prices drop, if the prices drop. And what I mean by that is just as Frank talked about, he nailed it right on the head. If your thesis doesn't change, then you shouldn't change. Now, I'm not saying you should be blindly arrogant, bullheaded about change. If it's changing, you ought to acknowledge that. But like he talked about with RAP, RAP's been a black eye. It's finally getting a little bit of momentum recently. But overall, that thesis hasn't changed. Galaxy Digital, when I was down 80% on that stock in the past, it was very frustrating, but my thesis was still intact. It's like, well, this could still be a Swiss Army knife and all that. You know that story. If the market drops and you get a lot of stocks, I'm going to talk about 2 familiar stocks you guys on Wall Street Unplugged Premium are familiar with. Unless those theses fundamentally change, it is a buying opportunity. And so a couple of just tailwinds that I want you to think about if markets come down. A is the Trump administration tax policies, the big beautiful bill, whatever you want to call it, all that stuff, legislation passed. Is that changing? Okay? No. And whether or not you are a fan of the president or not a fan of the president, you have to pay attention that there is a lot of stimulus in that bill that will kick in next year. And Treasury Secretary Scott Bessent was on, I think, Fox Business this morning, maybe it was yesterday, and he was talking about, hey, next year, tax refunds are going to be higher than they were this year. There's going to be more deregulation coming. And there is a lot of pro-business forces or momentum. The odds are it will push asset prices higher, not lower. I'm not saying that's a guarantee. Again, my crystal ball is fuzzy at best. But the point is, unless the legislation is undone, which isn't happening, you don't want to fight all this. Now, what else do we have? We have a Federal Reserve, an independent Federal Reserve, that is going to cut rates. And as I talked about last Thursday when I ran this show, they're also going to be tinkering with their balance sheet, and that's going to be even more stimulus for the markets in the form of liquidity and stuff. Again, don't hear what I'm not saying. I'm not saying stocks can't go lower. I'm saying prepare for stocks to go lower. Get your watch list, get your checklist, and be prepared to take advantage of that. Because unless the world ends, people, and then it don't Florida matter, the sun will come up and stocks will bounce around. And what you want to focus on are those theses that haven't changed. So you have massive legislation, tax cuts, deregulation, and I'm frustrated, I can't even explain how much impact deregulation could have. That's why I'm a big fan of Home Bank Corp shares. I talked about them briefly. They're in the mood for a deal, whether it be big or small. We'll see how that plays out. HOMB is the ticker there. So you have the positive legislation. You have Trump being the bully pulpit, arguably I think he's the best marketer in politics. And he's going to continue to push for deals and headlines that are going to be positive, in my opinion, for the economy. You have the Federal Reserve that is going to be lowering rates and easing its balance sheet. And then you also have, as Goldman Sachs is predicting, you're going to have massive corporate buybacks. Now, there's slated to be over $1 trillion in corporate buybacks next year, and that's only going to increase. And remember, Frank has said this best, we are huge fans of quality companies that buy back large chunks of their share because it shows you, A, they have to have a strong balance sheet and produce strong fundamentals to be able to do that. And B, it shrinks the number of shares, therefore increasing each share's individual earnings piece of the pie. So all things being equal, if you don't grow earnings, but you shrink the number of shares that you're dividing earnings by, each share gets a bigger portion of that earnings. So I've talked about AutoZone and O'Reilly. They are some of the absolute best that run great businesses and buy back tons of their shares. Look at those stocks over time. They have rewarded shareholders very well. Those big legislation, Federal Reserve, buybacks, those are just three massive tailwinds that unless those fundamentally, change, then you want to view the pullbacks as a buying opportunity, okay? Now, let's talk about a couple of familiar stocks that we could use to say, let's buy on a pullback. Numero uno would be GE Vernova. And these guys just reported earnings, and this nice candle here down yesterday was when the market really sold off. And these guys are, the big moneymaker here is their natural gas turbine engines that they can fuel data centers and everything with. And the backlog, is what I was trying to say. So they just reported earnings, and the stocks pulled back a little bit, and it does trade at a high PE. I mean, FinViz, I'm not taking this as the gospel. FinViz has got it at 47 plus, and it's off its highs of around 678. Somebody just lowered their price target by $5 on their price target. I think they took it from 685 to 680 or whatever. But when we look at this, you got $7 billion in sequential backlog growth. Sequential means quarter to quarter. So backlogs are growing nicely. Revenues are in the double digits. Free cash flow, bit under $1 billion. You got $700 million coming in there. This is just the snapshot they released on their presentation when they released it. Free cash flow. Remember, that's important because that's what's left over after paying all your bills and then reinvesting in future growth. That's key. Okay. You've done everything, you're doing well, and you still got $1.9 billion under your mattress if you want to. So power, wind, electrification. You know me, I'm not a big fan of wind. They took some losses in the past, but they've really shored that up pretty well. They reiterated guidance, adjusted EBITDA margins of around 8 to 9%. And this is a clear leader and one way to play the power play of all things AI and electrification. So if you want exposure to that, then you would look to add to this. And again, I'm not telling you to completely ignore the fundamentals, and we can argue all day until we're blue in the face about what the correct PE or forward PE should be on a stock like this. And then you can get into the AI bubbles and all that kind of stuff. My point is, I missed this. Frank and I did a good job of recommending some stocks in this tariff tantrum April sell-off. This one is one I've talked about a lot. And my point here is, I'm not telling you out buy today, but those earnings yesterday or the day before, I thought were very strong. And now, if this stock dropped 10%, or better yet, if it fell all the way down here, and again, I'm using FinViz and they draw these for you. If you look at this 200-day moving average around just under the 475 mark, I would look to be buying it as it falls down towards here. Again, if you want exposure to this trend. And I think this is a great company. These guys have backlogs that go out years, billions and billions of dollars. These guys are in the crossroads of AI and electrification and everything energy, which is obviously very positive. Another play here that we've talked about is Vertiv Holdings. And this is an old Dollar Stock Club portfolio holding. We did this very well. We made over 100% when we traded this in the portfolio. And then during the April sell-off this year, I threw this in the Curzio Research Advisory, and it's up very nicely since then. The point here is, again, just like with GEV, these guys just came out with solid earnings. Third quarter organic orders up 60% compared to the prior year, 20% sequentially from last quarter. That's pretty impressive. They're looking at a backlog of $9.5 billion, just like backlog in GEV, which I didn't say. That's future orders that will be turned into revenue. Those can be canceled, those can be shifted, those can be delayed. So don't, take that with a grain of salt. But it's great to see that growth and continued backlog there. To put this in perspective, $9.5 billion is over 10% of the market cap. Vertiv is about 70, I think. Yeah, give or take 70 billion right there, market cap. And again, you can see one of these little squares for me here. You just draw a box in this 160 from October to present, from this 160 to 180 range. And this is a beautiful chart because it's just in a clear trend, an uptrend, obviously from the April lows, but higher highs, lower lows, just trending bottom left to the upper right. Now, if you're not in this, and this is fine, you can wait for a pullback back to the 140 level or as it's fallen there. However, if it can break out, if we get more market momentum, and remember, This is a headline market right now. President Trump is supposedly going to make a big announcement of some sort today around 3 o'clock. That's an hour before the market closes, depending on what that is. That could have great impacts across the market. If he says something about X and all these stocks from Y sell off, well, then pay attention to that. That might be a good buying opportunity. The point here is if the market gets a little bit of excitement around maybe China-US trade deal not going to be that bad, or something not escalating with the Russia-Ukraine war or the Israeli-Gaza war, who knows? If markets get a leg up here and this stock, VRT, breaks out above this 180, if it breaks out to a new high and you start seeing 185 or 186 or more, then you can buy it for a breakout. Okay, that's an easy trade setup. If this thing is going to buy a breakout, it's going to go into price discovery and it's going to zoom. Markets like round numbers. If it breaks out, it's probably running to 200. We'll see what's going on there. But Veritiv, these guys make the cooling systems for all these racks and data centers that are fueling and help AI expand into everything. I'm not getting into the weeds on this, but it's been absolutely fantastic because you guys are familiar with this stock. I just want to say thank you to you guys, you subscribers in the network, because a couple of emails recently I've gotten around the cooling systems and how this is still a major play in all things AI and the data centers is amazing. And I just appreciate you subscribers and sending me emails. Keep them coming, DanielCurzioResearch.com. I try to get back to everybody. If I don't, it is not personal. I'm sorry. You can email me again. I try to get back. I reread these. I flag them. I just really appreciate the insight and knowledge. Because again, do not make the mistake of looking at me like a know-it-all or anything like that, okay? I'm learning as well. I'm just got a big enough ego to get in front of a microphone and have fun and say it, try to help you guys and provide value there. So, all right. So Veritiv, GEV and Veritiv there, I would buy on pullbacks. And if the market is going to give us some opportunity.
I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members only podcast where I dive even deeper into this week's events. Tell you specifically what moves you can make today. Specific investment ideas I'm recommending and tracking each week. Also, the news we're picking up from our network of insiders. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.